Welcome to The Explainer. Today, we've got a fascinating story for you. It's about how a political squabble over Greenland, of all places, sent a real shockwave through the U.S. stock market. Let's dig into how this all went down. So, picture this. It's Monday, January 19th. U.S. investors are waking up, grabbing their coffee, and they're greeted with a sea of red. Futures for the S&P 500 had already plunged nearly a full percent before the market even opened. And we're not talking about a minor little dip here. This was a significant pre-market slide, a clear sign of anxiety that really caught a lot of traders off guard.
And the concern was widespread. It wasn't just the S&P 500. Futures for the Dow Jones were also way down. That tells you this wasn't just one sector having a bad day. The entire market was feeling the pressure. So what on earth caused this? It wasn't a bad earnings season or some gloomy economic report. The trigger was actually a direct threat from the U.S. president.
The news that dropped was a plan to slap a new 10% tariff on imports from 8 key European allies. I mean, a move like that is a massive deal. It's a major escalation in trade tensions that puts billions of dollars of commerce at risk. And just take a look at this list of countries. We're not talking about minor trading partners. These are some of the biggest economies in the world and some of America's closest, most long-standing allies. Which, of course, brings us to the big question. Why? Why risk a trade war with such critical partners? And why this specific group of countries all at once?
Well, the answer is pretty incredible. It has nothing to do with broad economic policy. It's all about a very specific, high-stakes geopolitical fight over the world's largest island.
That's right. The root of this whole conflict was their unified opposition to a U.S. proposal to take control of Greenland. And you have to remember, Greenland is an autonomous territory, but it's part of the Kingdom of Denmark, which is one of the nations on that tariff list. Europe's response was fast and it was blunt. In a really strong joint statement, these 8 countries just slammed the threat, saying it risks a dangerous downward spiral for the entire transatlantic relationship.
And market analysts are looking at this and thinking, whoa, this is more than just a temporary tiff. They see it as a symptom of a much deeper fracture in the trust between Western allies.
This quote from analyst Stephen Innes really nails it. He's saying that when that political trust between allies starts to fade, the financial trust follows. For decades, it's been a given that Europe would invest its money in the U.S. Suddenly, that's not such a sure thing anymore. And this brings us to this key idea called slow rebalancing. It's not about a sudden crash. Think of it more like a giant river slowly changing its course. As trust in the U.S. as a stable partner goes down, all that global investment money might start to find new places to go. Of course, a dispute like this doesn't just stay between Washington and Brussels. The shockwaves were felt in markets all over the world, but the reactions were definitely not all the same.
Over in Asia, things were pretty mixed. You had Hong Kong and India down, likely because of all the global uncertainty, but mainland China actually edged up a bit, and South Korea's market surged more than 1%. That was mostly thanks to a really strong day for its tech sector, which sometimes can just power through this kind of geopolitical drama.
Beyond the stock market, we saw a classic flight to safety. When investors get nervous, they sell riskier things, so crude oil prices slipped, and at the same time, they pile into traditional safe haven assets. Gold jumped almost 2%, and silver had a massive day, leaping over 5%. So with all this volatility, the big question for everyone is, what now? Where should we be looking for clues about what might happen in the next few days? Well, there are 3 really big things on the horizon. First up, we've got earnings reports from huge companies like Intel. That'll give us a real pulse check on business health. Second, new inflation data is coming out, which the Fed watches like a hawk. And speaking of the Fed, its next policy meeting is just 2 weeks away, and their decision on interest rates is going to be absolutely critical. You know, this whole thing is just such a stark reminder of how interconnected our world really is. A diplomatic standoff about an island in the Arctic can directly hit your retirement account overnight. It leaves us with a final question to chew on. In a world this intertwined, is any political story ever really just a local dispute anymore?